Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so in this video, I'm just going to be basically going through kind of my breakdown of how I've been utilizing unusual whales, which I'm also, I think an important factor of that is I'm attempting to learn how to use this while working a full-time job. So I don't have all the time in the day to be scanning the market, scanning the charts. And so I think that does factor into how I do this. But also, I think we're all individuals. Our brains all work a little bit differently. And so this is just kind of, what has been working with me or working for me with my time constraints and, just my limited capacity up here. And yeah, currently there is no sale on unusual whales, but every couple months they tend to have one where you can get 15% off. I don't get anything from unusual whales. I'm just trying to share what I've been learning, especially because this week, it's been a really good week for me. I don't have huge trades as far as amount of money goes. I'm just not super wealthy or anything like that. But I've had some really good trades where I've taken profits, a little too early on some of them. And with that being said, I've also left some on the table runners to keep some gains going. And yeah, I'm just really grateful for that I have been, for myself, from my own experience, been showing progress. I used to just take profits at 20% and then, FOMO or, back and forth type of stuff like that. But I've been more, looking at the levels that make sense, looking at the data that makes sense. And, I've been getting better. I think I need to get better at, waiting to take profits on trades that do look good. But, profits are profits. And so I'm just really proud of myself, how I've been learning. And I'm really grateful for this week. And so I thought I'd just make this video in case it's helpful for some of you guys. And so, like I said, I don't really look at alerts, or I don't have alerts just because I get overwhelmed by them. I haven't figured out how to manage them. And so what I've done is I've just kind of compiled a watch list of contracts. And this contract lookup, I'll show you how I get to this page. Basically on either contracts that I hold, stocks that I hold, and then also contracts that stand out as, having a lot of data behind them that's useful to look at, that might be, too expensive for me to buy, but the data is still there. And so generally, this is my Chrome browser. Usually I just have, let's see, about 7 tabs open, just the channel dashboard, my X page, and then I have contract lookup. I have a tab open for the flow, and then I do have the Max Pain tab open. And then with TradingView, I usually have Bitcoin and Ethereum up there, nothing too exciting. And so, yeah, I'll kind of take you guys through how I get to these tabs. So the first one, I'm just going to open up a new tab, go to the Unusual Whales website, go to flow data, and then go to contract lookup. And so these are bookmarks that I've populated. I'm actually going to get Ed to step out of the way. And, you can search for the ticker over here, and then from that, search the expiration strike and whether it's a call or put. So yeah, I've just populated this over here. Eventually, as I get more dialed into, my system with unusual whales, I'll probably have bookmarks based on tickers or maybe sectors or, memes, stuff like that, if I think some things move together. And, but yeah, right now I just have, kind of the default bookmarks tab there. And then if we do go back to the Unusual Whales page, how do I get to, just over here, how do I get to this flow tab, which actually has this contract popped open for open, because somebody was asking about that. To go there, we could just go to the flow data again and then go to flow feed. And then from that, I already have open searched up here. But if I wanted to just kind of clear my search, could do the reset filters here. And, I could search for, whatever ticker I'm interested in. One that I have been following and is in my bookmark list. Actually, maybe I'll do something that's not on my bookmark list. BlackSky, I saw that they just got million or multi-million dollar contracts. So I might type BlackSky up here, and then from that, leaving everything in the default parameters just because, I don't have enough know-how to really, filter that, or at least don't have enough time to really dive into the nitty-gritty. I usually initially filter premium by a minimum of $1 million. But then for a company like BlackSky, doesn't look like there's been premium traded of $1 million. And then I just delete a 100,000, and we can see the different different days here separated by these horizontal lines that contracts were open, whether they were in the ask, the bid, whether they were open or closed. These are the contracts that have a premium of more than, $100,000. And so, I'd initially just look at this, and then to be honest, what I do is I just click on the first contract at the top of the list, because I just want to look at the net premium for that contract. So just going over here, we can see that. And generally what I like to see is net call premium, or NCP, being above $1 million, because then that tells me that there's, a lot of money going into the contract. And so right now for BlackSky, we see the net call premium of about, just shy of $100,000 as the stock price is going up about 7%, it looks like today. And then from this, I would then expand this back in time. Maybe I'd go 7 days, or here for this example, I just go the past 30 days. And then I'd look to see, are there any trends in basically the green or red lines, the net call premium, which is green, or the net put premium, which is red. And if it looks like net call premium is going up a bunch, maybe that's something I'd want to, go long on, whether that's shares or contracts. Contracts, options, very, very risky because they could all go to zero. Most of them do. And so using the options data can just be a really nice tool to get an idea of, hey, this stock that this company that I'm interested in investing in, buying some shares, does it seem like it's bottoming or about to continue higher? Maybe it's topping. And so I can look at the options data to get an idea of whether or not it is potentially topping or bottoming. A bottoming signal, in my view, would be, or the beginning of a bottoming signal would be if the net put premium in red here was starting to come down, meaning people are selling puts. And then that could be a suggestion that there's a bottoming happening. And so over here, we do see a little bit of a dip in the net call premium. It looks like net call premium only dipped down by about 170,000 negative. So, not a huge amount, but following that, the yellow line is the stock price. We can see that that was the bottom, and it did go higher. But really, I would think that if net put premium is negative, if it's going down, that would suggest that the bottom is beginning to form, and then it might be consolidating for a little while, kind of boring people out of positions, which would then cause premium on contracts to go down based on theta decay, time decay. But then if we were to start seeing surges in call premium, net call premium going up, that would be suggesting that people are betting, whales are betting that stock is going to go higher. And then following that, you would see it go up. So that's just kind of a brief overview in looking at the flow, how I would utilize that. And there's some more nitty-gritty details that I could get into with that, but just for this quick overview. And then to get onto the Max Pain, there are a number of free websites. You can look up Max Pain, but Unusual Whales does offer that, and it's very useful. And I believe you might be able to look at the the Max Pain data for free if you don't have an account. But I do think it's a really great tool. I've learned so much. I got the annual subscription during the Black Friday sale. After having experimented with it for a couple months, I decided to commit to a year. And I think that's really been a great decision because it's allowed me to, if I'm busy at work, busy with a project, vacation, whatever it is, I might take a little break from looking at the data, and then that break, refresh, come back to it, I can really start to learn more about it. But then anyways, getting back to the Max Pain data, going to the flow data over here, and then the Ticker Explorer, come down to the Greeks. And then from that, that pulls up the max pain data. And so, looking at, as the example was on BlackSky, I'm just going to type that up here, search that, and we could see the max pain for this coming Friday on the 18th is 20. And then following max pains are all lower than that. It does look like max pain is not at the money ATM, which means that, stock price is higher. In this case, the percent difference to current, so these are all negative numbers, and so that means that the stock price is above max pain. There could be a gamma squeeze or a gamma ramp, something like that with BlackSky. For this example, I'm not trying to push it. I'm not in it. It was just an example. I happened to see their post on X that I liked, and so I thought I'd show that as an example. But yeah, I mean, this, to be honest, actually looks pretty intriguing because current price is, 27.77. Max pains are all down here. This looks like it's in gamma squeeze territory, to be honest. So that's pretty intriguing. I might have to stop making this video to do that. No, I'm just kidding. I'm going to keep doing this. But so anyways, coming back to my contract lookup list, this is something that basically after the close or, after work, I'm on a rotating schedule. So sometimes I get home from work late. Sometimes I get home from work right around close of the market. And I just kind of like to go through this list that I have to just kind of scan the net call and put premium over here. And so the first one on the list is going to be, AMC. And so just looking at this, net call premium is up 127,000. That's not a million, so I don't really pay attention to it too much. Although, to be honest, AMC is looking like it may have bottomed. It's looking like it might be taken off pretty soon. Also, we do see a lot of movement in kind of the meme stocks like Unity Software. And so maybe some of those gains would be rolling over to, GameStop or AMC, something like that. So I do think that this is a very interesting time to be looking at these stocks. But anyways, this is the only contract that I'm looking at. This does happen to be one that I hold, the $20 call that expires in January. I like to have multiple months for my contracts personally, just as far as, I manage emotions, manage risk. I get a little bit anxious if the expiration date is, a month or less away, and then I end up exiting at a loss or a little too early, whatever. So at least 6 months, that's kind of how I like to look at these contracts. Anyways, the next one on the list, bull contracts. I believe this is one that I had maybe done some videos on, a $30 call that expires again in January. I do have some other contracts up there, but I'm really just looking at this net call and put premium, and we can see that the net call premium, it's up about $500,000 today, so that's looking pretty good. If we do look at this over like the past 30 days, we can see that the stock price has gone up a bunch. The yellow line looks like it might be forming, a bull flag or a falling wedge. And then it's broken out. So that does look really good, but there's not a lot of premium behind it. So what I would like to see is, premium behind these moves. This is a contract that I had traded. I don't hold it anymore. And to be honest, I only hold one share and I don't need to hold it. So I'm just chilling on that. If price does come back to my average or the data over here really starts to look pretty bullish on this 30-day time scale, it doesn't necessarily. If I look at the past 7 days, we can see that, there are some spikes in the net call premium, but it's not really taken off. So, this move that we're seeing, 2.75% in the stock price on the day, maybe it's short-lived. I really want to see the net call premium taking off before I would consider going long or going a little bit more heavy on my very small long position. So anyways, I'm just going to switch this back to the 1 day. I've got ChargePoint on the list. This is a put that I do hold. I almost sold it yesterday. I do have a limit order sold, a place to sell. My average is at 2 cents. And, I had a limit placed at 4 cents that wasn't filled yesterday, so I adjusted my sell to 3 cents. No volume today so far. So this is just a super boring one, and I think this is a really nice example of whether you're trading stocks or contracts, you want to be looking at ones that have a lot of volume because if there's no volume, zero here, there's no exit liquidity, so I'm having a tough time selling my contracts. I only hold about 16 at $2. I'm risking 32 bucks. So 2 cents, 2 cents times 100 shares per contract is $2 times 16 contracts, 32 bucks risked. But yeah, I mean, I was hoping for a 2x that didn't get filled. I'm cool with 50%. I'm also cool with it going to zero. And the reason why I did buy puts on this is because I thought that they'd have a reverse split. That was announced. And yeah, I mean, it's just, in all honesty, not looking too good at this point in time. Maybe ChargePoint after the reverse split, which has been announced. And will be taking place by the end of this month. Maybe after that, once it's like bottomed, maybe it could be a good investment. But I just feel like in the EV space, whether it's political, administrative, or, just with Elon Musk being in that space, it's very volatile. And so I think that, if one is to long the EV space, just do it with Tesla. They're the leader, they're the innovator, and they're much more than just an EV company, charging company, battery company. And also, with Optimus and stuff, they've got so much going for them, although, Elon does make that fun at times. But yeah, so this one, ChargePoint, not interested in it. And let's see, GameStop is the next one on the list. I think GameStop's really risky because they could be raising capital, whether that's to buy Bitcoin or other investments. So I don't have a contract in GameStop. This is one that I had traded, and actually I think I had contracts that expired in June, which I was trimming lower than my average because I was worried they were going to expire worthless. I could have made money on those, but I just wanted to avoid risking them going to zero. And so I could have played that better, but that's all about risk management and stuff like that. And so this is the $80 call for GameStop that expires in January. Really just looking at the data over here, we do see the stock price in yellow pulling back some today, with net premium up about $425,000, not $1 million. We do see the net put premium in red, though, dropping, selling. That could be suggesting that there is a bottom happening with GameStop, or it's about to be taking off. Net put premium dropping by $677,000. So this is actually pretty intriguing to me, not necessarily for the contracts, because I think it's really risky with GameStop, like I said, but just as far as shares go, maybe, around 358. I believe Roaring Kitty's average was 23.41. Right around there. That's what his YOLO post was, his last one on Reddit. Maybe Roaring Kitty comes out in a week or so with some tweets, and maybe GameStop starts taking off. So maybe the selling of puts could be, that sign. So I do find this to be intriguing. If we look back over the past 30 days, though, we don't really see anything that really stands out substantially. And actually over here, when the stock price dropped down a bunch, we saw an increase in puts, net put premium, a decrease in net call premium. And so I'm not sure if these were, the result that resulted in the drawdown in the price, or, were kind of a reaction to it. But yeah, I mean, we don't really see anything here. What's going on currently, it's really just noise. We need to be seeing some moves breaking out to suggest that GameStop's going to be going up or down, volatile moves, either direction. That's what the options data is useful for. The next one on the list is going to be Intel. I believe this is a contract that I hold. Let's see. Yeah, I believe so. This is the $50 call that expires in January. I also have some shares, but a very small position, around like $18 or $19. So I'm currently green on my shares. But this contract, given that, let's see, what do I want to say about this? I guess I just want to talk about the net call and put premium. Both of them down a little bit today, less than $1 million. Nothing really stands out. If we go back the past 30 days, we do see that the stock price has gone up, net call premium has increased. And so kind of what I view is this pullback that we're seeing in the stock price. We're not really seeing too much going on with the options, at least not relative to this big green spike up here when net call premium increased by $14 million. So that's pretty crazy. if that is the case, that is the case here for this example, $14 million net call premium, then I would look at that specific day and then try to figure out what were the contracts that were traded on that day, which I suspect is going to be this other contract that is in my list, which is the $24 call that expires in March of 2026. Let's see, on this day when we had that spike in $14 million net call premium, that was on July 7th. Oh, no, sorry, that's today. July 17th is today as I'm recording this. That spike was on July 8th. So then I'd scroll down to this historic volume and open interest to see July 8th. On to July 8th here, that's when we had a volume for this contract of just shy of $19,000. Saw an increase in open interest of just shy of 18,000, just shy of 19,000 contracts volume, and then we saw an increase in that open interest just shy of 18,000, and we have since seen that hold up, but more recently it has dipped down some. So just a couple days ago on the 15th, we saw a volume of just shy of 10,000, which resulted in a drawdown of just over 6,000 contracts drawing down. But if we look back on the 8th, the open interest on the 8th was 58 contracts. So that's what we have to, think about here. 58 contracts, open interest. Now we're at 13,000. So even though there was a drawdown of about 6,000 a couple days ago, it's still up massively relative to, this 58. So, just considering that, I think that, what we're seeing, I think that this is, maybe it's a falling wedge. The yellow here, this is the stock price. Maybe it's a falling wedge. Maybe it's a bull flag. I don't really know. But just like over here, we saw some consolidation. Super boring. People get bored out of the position, and then it makes the next leg up. And so that's basically what I could be seeing with Intel, is that we just see some consolidation before the next leg up. So, I'm chilling. I'm not too worried about it. Other ones on the list, I recently added Kodak thanks to, I believe the Bronx Viking posted about it. And then also Free Wyckoffs on I believe X, but definitely their YouTube channel, posted about Kodak. And so I thought, hey, this is kind of a funny trade. Just Kodak. Everybody thinks that, they're a dinosaur now, gone extinct, but, they're actually doing some stuff with pharmaceutical things, as far as I understand, went away from film and now are doing more pharmaceutical and or pharmacist type of stuff. I don't really know, to be honest. But yeah, this is a contract that I was initially looking at, the $12.50 call that expires in January. The reason why I was looking at that, if you look at the chart, which I'm not going to do in this video, I just thought that, getting to $10 to $15 seems like, if it were to squeeze, it could be getting up to that level. So that seems like a good target, but not a price I'd want to be holding the contract to expiration. Just capitalize on upside moves at a discount, because the premium for these contracts, since they're so out of the money, stock's trading sub $7 right now. So this is like a 2x from that. The premium's pretty cheap, so that's intriguing. But I was actually looking for, at the time, just a few days ago, the $15 strike, but that did not exist. But then the day after, believe it or not, that contract began to exist. And so I've actually viewed this occurrence in the past. I've experienced it where if something's going up, very volatile to the upside, you see the stock price in yellow over here going up, also net call premium going up. I viewed that net call premium as chasing this as it was going up because I saw this contract be introduced. It's effectively diluting the options chain. So let's say I'm super bullish, I'm a degen, I want to be buying some super far out of the money contracts. This $15 strike that I'm interested in doesn't exist, on the 14th or whatever. 15th was on the 14th, I think that was Monday. Doesn't exist then. So then market makers create this to then dilute degens like me from loading into the $12.50 call, which, maybe could be closing in the money. Who knows? And then so they create this $15 call that's just further out of the money, less likely to close in the money. And then degens pile their money into that one because premium's cheaper. And so then stock price pulls back. And so we've actually seen the stock price pull back here in yellow. And so for me personally, I do have one contract here. I think my average is 35 cents, which is $35, 100 shares per contract. I can lose 35 bucks. That's not a big deal. I just wanted to get that contract, so I'm paying attention to this. And then I did buy, I believe, 20 shares. I think I'm a little bit red on both right now, but no big deal. I don't have a big position. I do see that the stock could be pulling back to around 650, and so I'd want to be adding more aggressively to my share position and maybe this contract on that pullback. But yeah, because this contract was introduced, it was just created, I expected there to be a pullback in the stock and premium. And so I'm just kind of keeping this on my watch list, and that's exactly where it's at. Next one on the list is going to be Mara. And so I believe the contract that I hold, I have been trimming, to be honest, as stock price has gone up. But that is going to be the $50 call that expires in January. I'm just bullish on crypto. I'm bullish on Bitcoin. And I feel like now is the time for miners. So I think Mara is a very intriguing one, but we do see this, selling here. So, but it's also not very much volume compared to the open interest. So I do still think that this could be going a lot higher. And if I have been trimming, it's really just to, be managing risk. And actually, I believe my average for this contract, I don't have a ton of them, maybe just 4, is around 71 cents. So I'm kind of, a little too close for comfort in my, from my perspective, but at the same time, I've taken some profits. So I'm not really holding these contracts with much risk. If they do go to zero, I might lose a little bit of money net with my Mara position, but not too big of a deal. But anyways, looking at the data over here, I should probably just go back to the 1 day. We can see that the stock price is going up. Also, net call premium is going up, but it's still less than $1 million so far today, just shy of around $700,000. And then if I do look, like I just had it up the past 30 days, stock price is going up, but that net call premium isn't really catching up to it. But it does look like a few days ago, maybe I just switch back to 7 days over here, we did have a net call premium up here, just shy of $5 million over here, just shy of $4 million. But we did see some selling after that, it looks like. Maybe that's just hedging. I believe there was some either rolling of contracts or multi-leg strategies going on, which I've probably covered in a post on X or something. I'm not really sure. I try to post my thoughts as tweets on X, and then maybe I make those into videos. So I mean, generally I'm bullish on Mara. Doesn't really matter what's going on in the data here. Just that's kind of my crypto or Bitcoin thesis, with this being the year after the halving, the 4th year in my view of the cycle, where Bitcoin could be topping later this year, but due to the shift to more Wall Street involvement in crypto, maybe it goes on a lot longer. So I believe Mike Alfred, that's kind of his thesis. I think he's a really great person to follow. And he's also been talking a lot about miners, not necessarily Mara. But yeah, I mean, I think this one looks really good, but I'm not necessarily seeing signals that it's going to be launching up the next leg higher. When we see net call premium, millions of dollars by the end of the day, maybe that could be a sign. Also with this, maybe I haven't mentioned it, but kind of the signal, whether there's net selling or buying, is the volume. As far as, my interpretation of that goes, if the volume is green, that would suggest buying. If the volume is red, that would suggest selling. And so here what we have is net put premium being drawn down. So that would make me think that it's being sold, but that's being overweighed by the increase in the net call premium, that going up, volume going up. That suggests that people are selling puts, which is bullish. People are buying calls, which is bullish. But is it going to be breaking out tomorrow? I don't know, but I do think it's going to be continuing higher. And then there are some other contracts that have kind of stood out to me as, having some volume on them. So one of them over here is the $15 call that expires in this coming Friday, tomorrow. And so Mara is trading above 15. So this is going to be closing in the money. It looks like people have been taking profits, but the open interest for it is 30,000. So that's, maybe this is gamma squeeze, type of territory. And, on the note of gamma squeeze, if I was curious about something like that, like I kind of am with Mara, I would then go over to my Max Pain tab and then just type in Mara up here, get a quick look. What is the Max Pain for tomorrow, July 18th? Max Pain is 17, whereas the stock price above, 17, it's nearly at 20. And so that could be suggesting, especially with all of these max pains being below current price, that this could be getting into gamma squeeze or gamma ramp territory. But with $17, being below current price, there could be a bit of a drawdown. Market makers wanting to bring price closer to max pain before this expiration, because when the majority of contracts expire in the money, that generally means that people, retail investors, as far as I understand it, are making money and market makers are having to pay them out. When things close at max pain, that means maximum pain for retail and maximum gain for the market makers. So it's in their interest to bring the stock price down tomorrow, but being, notably above multiple strikes, which are in 50-cent increments, above 17, Mara is looking really good. And then 19 is another contract. This has an open interest of 12,000. It looks like volume so far today of 4,000, which I didn't talk about the volume of Mara. Yep, it's really, kind of muted. A lot of contracts expiring in the money tomorrow, I believe. 19, this one makes me think that market makers could drive this down to $19 tomorrow, below $19 at close. And so I'd be a little concerned about that. It does look like people have been, I imagine, taking profits on this with open interest going down, but still 12,000 contracts held open. It does look like I have a put, the $15.50 put that expires tomorrow. These are, unfortunately going to be expiring worthless. People have been cutting their losses, I imagine, on these. Or maybe they took advantage of, the little bit of a pullback in the stock price. I don't really know. So let's go 7 days. Yep, maybe they took advantage of this pullback here in the stock price. And so maybe that was actually, taking some profits on that drawdown. I don't really know. Not going to dive into it here. Then we also have the $18 strike that expires in September, 64 days from now. So that's a little bit more comfortable time between now and expiration than, like a weekly contract. Got couple months between now and expiration. And this actually saw an increase in volume yesterday, or I should say volume of almost 23,000, which led to an increase in open interest of about 22.5 thousand contracts, which is almost, an increase, like a doubling of the open interest, going from about 53,000 to around 76,000 open interest. And so this does seem like, these are in the money calls. This seems like a safer bet, but with these being a safer bet, the premium is going to be more expensive. So like if buying the average, which is $3.30, multiply that by 100, that means that one contract costs $330. And currently it looks like the fill right here most recently was $3.55, so $355 per contract. But this actually does seem like a pretty, like of the ones up here, this does seem fairly appealing, given that it's not expiring tomorrow, and that there is some time. It is in the money, and generally the thesis with Bitcoin, with miners lined up, this seems like a pretty intriguing one, but this is not one that I hold. Generally, I don't like to spend more than, $100 on a contract, so that would be, I don't like to go more than $1 per premium. Dollar times 100 shares per contract, $100. Yeah, so that's pretty much it for Mara, because I've already covered this $50 call, the one that I hold. But yeah, I think it looks pretty intriguing, pretty good. And then the next one on the list is going to be Nio. I think the contract that I hold is going to be the $15 call that expires in January. I do I would like to add more to it. I believe I have a limit order placed at 7 cents, at 6 cents. And actually, I did have an order filled while I was recording this video. I'm kind of wondering, maybe 7 cents average fill. It was just one, so probably not me. But let's see. What did I have? Nope, not. It wasn't Nio. But yeah, I mean, this one, do I think Nio could be closing above $15 in January? Probably not, but I think maybe momentum could be bringing it higher. And I've talked about this. I did make a video recently on Nio that was pretty popular. Thank you so much if you're new to the channel. This looks really good. And so because it's well above $4 now, $4.43. This is one I'd want to check out the max pain on for tomorrow. It was $3.50 when I made that video. Let's see where it's at now. Still $3.50. So these contracts are in the money. Need to come down about 21% in order to be closing at max pain. So this could be gamma ramp territory, but it could maybe be muted next week with max pain higher at $4. And then so if price goes up, maybe it squeezes up a little bit. Maybe that momentum's killed a little bit by this max pain increasing next week to maybe $4.50, being around where price is currently now. But yeah, I mean, I just think Nio looks really good. This video is like 36 minutes long so far, so maybe I do just kind of want to skip through these last tickers here on the list. But yeah, I mean, that for net call premium for Nio, so far today it's up over $1 million, $1.15 million as stock price is rising. Also, net put premium is down. So that does look pretty good. And then if we do look over like the past 30 days, stock price going up, we do see net call premium going up over here. I'm just going to adjust this to the past 3 days. Well, maybe I need to do 7 days. It's probably 4 days ago. And we could see here net call premium up nearly $4 million. A little bit of a cool off, shaking out people who are a little bit late, who are impatient. And, you know, stock price is going higher now in yellow there. So I do think that this looks really good. I do think that it's set up to finally gamma squeeze, which or gamma ramp, which could maybe be bringing it up to like $5, $6 range. I had previously talked about $8. Maybe now's the time. So, you know, I'm feeling good about Nio, to be honest, because the data supports it. It is a Chinese company. It is in the EV space. So, you know, it is a little bit precarious. So good to be cautious with it. But I think that we could potentially be seeing a rip your face off rally with Nio. And this is actually the one, it's like kind of like when going really long something, you know, taking profits, good to find something to rotate into or sit on the sidelines and wait for it. And this is one that I've kind of like rotated into a little bit, but also waiting for any opportunities to add lower, like, you know, at 7 cents, which unfortunately here, you know, is like only one contract was filled there because nobody wants to sell their contracts at 7 cents. This also, though, it doesn't have too much volume traded the past couple of days. We do see an open interest of 42,000. So yeah, I mean, I'm a small time guy. I'm a little fish, not a whale. I'm not even a dolphin. You know, I'm a little fish. I might even just be a tadpole, to be honest. Yeah, I mean, open interest is really good. So this kind of reminds me of the Unity software contract that I do hold, which I'll talk about in a minute, where, you know, it's like, it's the one that I got because premium was cheap, but it's also got a lot of open interest, which means there's liquidity. If I want to sell, if I want to buy, there are going to be sellers and buyers. So they will be able to meet any of those orders that I want to be filled versus like ChargePoint. There isn't a lot of volume or open interest. So there's not people wanting to buy or sell those contracts. You want to have contracts where there are buyers and sellers, and this does seem like that. It seems like it could be 2xing. I could see that happening, but good to manage risk. I'm not saying that it's going to, but from, you know, let's say the high 9 cents, this going to 18 cents. I think that could happen. Even just like a 20% gain, you know, that's nothing to be dismissed. So, yeah, but then the other Nio contracts, I just like talking about this stuff too much. This other one, I believe there had to have been something that really stood out to me on this. This is the $3.50 call. I believe actually that's what I talked about in my video. I go over so many stocks and contracts. They kind of blend together. But yeah, $3.50 call that expires in September. So if we go back, let's see, the past 30 days, yep, this is, what looks like on July 10th. If we scroll down here, we had open interest of just shy of 10,000. Then we see, open interest. I remember this is the one that I talked about in that video. While open interest is now lower than what it was on the 15th, which was above 200,000, it's still right around 200,000. We see a volume of 2,000 today. We did see a good amount of selling a couple days, 3 days ago, I guess, would have been on the 15th when there was that volume, 26,000, resulted in a selling of 17,432 contracts. There is some selling, but the stock price is going up, so that's going to, the stock price over here in yellow is going up, and that's, the premium's going up, so there's probably going to be some profit taking. Big order here, premium goes up, good to take some risk off the table. So I think that's just an example of that. If, I think kind of a good rule of thumb is that if you have a position and then it doubles in value, take half of it off the table, so then you're at no risk. You're playing with the house's money. Let's say I put in $1,000. It goes up to be worth 2,000. I take 1,000 out. I still got some chips on the table, but I'm not going to lose any money, not going to net lose any money. So I think that's kind of an example of what's happened here. But yeah, I think the data for NIO is really just suggesting that this is taking off. So I think it looks really, really good. Over here, this was requested, I think, in the comment on that last video, and that is, I think it's Red Snake, maybe. Shout out to you if you're watching this. What's going on up here? I had searched opens. That's what's going on up there. Just scroll up and we can see the contract. $4 put expiring in about a month, August 15th. Does look like, there's been some selling with that red bar there, which is for today. So we'll have to see tomorrow if the 3,000 volume so far today, if that's resulting in opening or closing of positions. And we'd see that by the change in open interest over here, which we'll see tomorrow morning before pre-market. That's when the data becomes available. But yeah, stock prices pulled back a lot of activity on these puts. And if we do scroll down, it's really just been open interest around 24,000. So far today, this is for the net call and put premium. It's over $1 million. I've already said that. But yeah, the total premium traded here, it's in the tens of thousands. And I believe by the definition of Wall Street bets, I might be mistaken, but a YOLO is defined by being $10,000 or more. And so if you get a room full of degens or a chat full of degens, maybe there's 6 degens there, 6 of them YOLO, that's around $60,000 or, less than that here, 46,000 premium traded. So that's not really, following whales. That might be like, following a herd of manatees. These degens, they're not necessarily the smartest of the whales, but they are whales. But they're just nomming on seagrass. They're not, chasing the moves or whatever. They're not ones to follow necessarily. So I think that if people are buying these puts on NIO, I think that they're probably on the wrong side of the trade, to be honest. But, maybe I'm wrong about that. I don't know. But yeah, moving on to the next one, Plug Power. This is a put that I have. I think I had 3 contracts, but then I sold one miraculously at break even. This is a trade that I was wrong on. I'm just holding them to maybe get break even. But if not, if they go to zero, my average is 11 cents. So I'm risking at this point $22. But yeah, this is one that I was wrong on. As you can see, current price is above $1.60. Above $1.50. And on that note, we can look at the, max pain for plug over here, and, it's $1.50. And so currently above max pain, but that's within the strike. And since strikes are 50-cent increments, this, to be honest, is not really an appealing one to be trading, especially not for contracts, because it needs to move like, I mean, if it's at $1.50 right now, it needs to move 33% to move to the next strike. So it becomes very difficult to kind of get a gamma squeeze, because to get a gamma squeeze or gamma ramps, you want to be like multiple strikes above max pain. And that would basically need to double from where it's at or go up 70%, And so I just think that's a little bit less likely with these kind of stocks that trade in like the dollar range. But we do see net call premium up over 100,000. But yeah, total premium traded, at least on this contract, it's like tens of bucks. But that's also, I said, bad trade on my part. But yeah, I mean, 100,000, that's like a classroom full of degens YOLOing. So, it's nothing too crazy. But anyways, I've been wrong about this put. I accept that. And with the CFO having bought and stuff like that recently, I think Plug from a fundamental standpoint seems like it's doing pretty good. But yeah, enough about that. Let's move on to the next one, which is going to be Peloton. This is one that I had talked about it looking like it had formed an inverse head and shoulders pattern. But also those head and shoulders, inverse or not, don't always play out. So I didn't want to put too much weight onto that. I did trade this, made a little bit of money on it, maybe 20%, something like that on a couple contracts. So not a lot of money. But yeah, this is one that I view as very speculative. I personally am not intrigued at all by the company of Peloton Interactive. That's just not my cup of tea. Everybody's different. I'm just not that excited by it. But what we see in the net call and put premium over here is we do see the drawdown in stock price in yellow. We also see the drawdown in net put premium, which looks like it came down by getting close to $500,000. But with that drawdown in net put premium, we see an increase in volume. So that actually makes me think that these puts are being bought, whatever they are. And this is actually a nice example. We could see that there is, this drawdown, this sharp drawdown. That means it's probably one order. So we can look at that time. That's around 10:08 in the morning. So then I could go over to the flow, and then I'm just going to clear it here. So we're starting fresh. Type in Peloton, PTON. And then I'm just going to filter by, actually, I don't need to filter by time range because I'm really just looking at what happened today at 10:08. And then I can adjust the premium here to be a minimum of $100,000. And so we can see this is at 11:30. So it's not exactly at the time that I want. So maybe I'd adjust this down to like 50,000. And 10:09, we actually saw some alerts here. This trade was part of a flow alert. That's what that symbol means. And these are the $7 put, which looks like they were filled on the bid side, which would correspond with potentially somebody selling these puts. And that's why you get the tag over here that this is bullish, because they were on the bid side. And since they're on the bid side, somebody's probably selling. However, the volume, like I was just talking about over here, suggests to me that they were more likely buying the puts. But if we do go back over here, we can open up that contract by clicking on the date here. And then really, just going back just to 1 day so we can see that kind of higher resolution. We see this here. That spike, candle premium around $420,000. And then we do see this net put premium coming down by around $440,000 so far on the day. So that does suggest that the majority of that is based on this candle. That makes a lot of sense. So this move is corresponding with this contract, a $7 put expiring in January. We also do see the open interest here around $4.4 thousand. About half of that volume has been traded. And so it could be selling today. Very possible that half of those contracts are being sold. It could also be buying, doubling down, or halving down, I don't know, singling down, whatever that would be, getting half of that and adding more. And let's see, there's something else I kind of just wanted to take a step back here. Let's look at the past 30 days. So with the stock price coming down like this, would it make sense for somebody who was holding puts, which, let's see, when did this open interest increase to 4,000? It's been at 4,000 for a while, going back to the beginning of June or so. When stock price was presumably notably higher. And premium the stock price is down, and so let's match this. The premium over here the past 30 days, there's not too much volume traded on this. But if we go back, let's say the past 90 days, that's the maximum we can do over here. We can see that there was this. The candle volume was around just shy of 3,000 candle volume, average fill of $2.43, so $243 per contract. That candle premium is around 700,000. And so with the stock price, the premium price having come down, it looks like, even though the stock price has come down, this could be, let's see. So this is around just shy of 3,000. So let's say 2,500, let's say, candle premium of 400,000. Over here, it was a candle premium of around 700,000. So yeah, I don't know. I'd have to think more about this, but it doesn't really make sense if you're buying the contract here, let's say, and so wait, actually, let's see, what was that date? That was April 10th. So April 10th, we just scroll down here to April 10th. We can see that the open interest was around 4,000, and then so that was probably an in and out, a day trade or something. This is one that I'd have to take more time to think about. But looking at this, I mean, it wouldn't make sense to buy puts here for 700,000 and then to sell them here at 400,000. That's a pretty big loss. So it could be, just doubling down, and that Peloton could be going lower. I don't know. We'd have to wait to see what the data is like tomorrow. And so I would follow up on that in my own personal investigations, my list checking out over here. But yeah, I'm just going to continue on to the next one. I got 3 more to go. Keeping this video to less than an hour, but I don't know if that's going to happen. QuantumScape, this is one that I was long. I got out too early. $10 call strike. Expiring in January. It looks like there has been some selling down here, so good to be cautious of that. We also do see the net call premium coming down, it looks like by almost $2 million. So that could be, taking profits at the top signal, so good to be cautious of that. If we go back the past 30 days, stock price has really, really taken off. And so maybe whether it's with this contract or, a different one, maybe, we've seen, scrolling down here, a good amount of selling, and the total premium has been in the hundreds of thousands to millions of dollars. And so that could be, over 1,000 contracts traded over here, which was, that would have been the decrease from here. And then, so 2,000 decrease from the 15th, so when there's $2 million traded, volume of 7,000 contracts, it then draws down by 2,000 and then results in an open interest going down by about, as you can see, by about 2,000. So this makes me think that the top could be in for QuantumScape, might need to cool off a little bit. The stock price over here was around $6. It's more than doubled. As far as I understand, in the past 30 days, it's well more than doubled because it was trading over here. Let's see, around, just trying to get the $4 or $5 here, now at 13. So yeah, might be a good time to trim a little, take some risk off the table. But, I don't know. I'm not in it. One that I wish I was in, but I'm long Ethereum, so I feel good about it. This was actually requested, I believe, on X. SBET, which is Sharplink Gaming, and they're basically, I believe, an Ethereum treasuries company, just kind of like similar to what Strategy is with Bitcoin, with Michael Saylor. This is SBET. And this is one I wish I was holding, but I'm not going to be chasing. We can just look at the stock price over the past 30 days. It's, really bottomed here and, rip your face off rally type of scenario, but I'm not going to be chasing. It does look like there's been selling, at least of this contract, at $10 call expiring in January. And, look at that premium, 26, 27 bucks. That's a lot of money. It's too rich for me, too pricey for me. But what we can see for the 1 day is we do see net call premium coming down by about $3 million. Net put premium also coming down by about $500,000. So maybe that's a little bit of a mixed bag, but generally bigger drawdown in net call premium. Also with that volume being negative, that does suggest selling of calls, which is also supported in the past few days of data over here, actually many days. And so that's going to be taking some profits, taking some risk off the table, makes sense. So yeah, this is one that I'm intrigued to get into later, whether it's this contract or a different one. This is just a contract I'm looking at to kind of look at the data over here. Right now, it's giving me topping signals and that, we could be seeing a pullback maybe to stock price being around, where was that? What was it over here? I need to, around 35. Oh no, I'm just going to go back 7 days. Let's see, when the stock price was around $16, so cut in half maybe. That would be, a level, or maybe over here when it's around 20. I don't know, just throwing numbers out there, but this is one I don't want to chase. And then the final one on the list here is going to be Unity Software. This is the contract that I hold. And actually, I got interested in Unity Software about a year ago because somebody requested it in the chat during Ticker Request Live. I did some videos and I could actually pull it up on the channel here. Let's see, the DGen Ed channel. If we just go to videos, it might even be popped up because I think it was a pretty popular one. I think I need to actually go to... I'm just going to search that. And yeah, this is the playlist, the U playlist in dip buy zone. When did I put that video out? So I'm just going to view the full playlist. And so that Unity Software video, that first one in dip buy zone, was 1 year ago. And then I put up Unity Software Slingshot pullback. And so this is one that I'm super proud of because it's like the great dynamic of the channel and social media and X of, I host, Ticker Requests Live so I can take requests. I don't necessarily pay follow up necessarily with most of them, but Unity is one that I did. I was very intrigued by it. I followed up based on my analysis, pullback before moon, and then now, seeing, stuff like around here when I was getting into unusual whales that, the Bronx Viking is posting about Unity Software. Maybe Roaring Kitty is in on it. So, yeah, this is just one that, I host a space to get ideas from you guys. You guys give me some great ideas. I do follow-ups. Things look great. Others who are way more credible than me, are talking about it. And it's just ripping some faces off. So super cool. So yeah, I'm just really, really proud of Unity Software. And this is the contract that I do hold. I did trim one at open, which was at 152. I have 2 contracts left. And my average for those contracts is 49 cents. To be honest, I was trimming, over here, taking some risk off the table. The lowest I trimmed at was 60 cents. The highest I trimmed at was this morning at 152. And yeah, I'm thinking I kind of want to just hold the last 2 contracts, one for a 10 bagger, which would be around $5 premium. And then the other one just to see what's going on with the dynamics of this contract. And so what we see is open interest is 35,000. And if we scroll down, it's only been increasing. It was 30,000 at the beginning of the month. Now it's at 35,000. And so if this number, starts to get, in the thousands red, then I'd probably start to take profits. And, that's not going to be me selling at the top, in all honesty. But that's fine. But I think that it's probably going to be higher than where it's at now because whether it's Roaring Kitty or not, I'm seeing people like the Bronx Viking being bullish on it. I'm seeing people like Free Wyckoffs being bullish on it. Also Colin Gladman, who works with the Bronx Viking. And so, yeah, I just think this looks really good and it's super cool to have kind of experienced this process of, ideas from the community and seeing this just really kind of blow up. So super, super cool. And this is actually the reason why I'm doing this video because I'm just like super grateful and happy about this. What we can see is net call premium. Maybe we're starting to see some pullback signs down $1.9 million, although net put premium is down about $250,000. We do see volume increasing though. So even net call premium is down. that could be still, orders being filled, but maybe they're just being filled on the bid for, buying. And so we'll have to follow up on this to see how that open interest is changing. Other contracts that have gotten a lot of traction, the $30 call also expiring in January. This one's just way too pricey for me, the premium, so I did not participate in it. And so I'm like, that's like over $10 in premium, currently at $11.59. That's $1,000, over $1,000 per contract. That's insane. Maybe the $65 contract will be there, in a month or so. I don't know, or months away. I have no idea. But yeah, this has just been a super cool experience. I just kind of wanted to share my process with you guys in case it's helpful. I'm going to bring Ed back and, share as always that those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos going over options data, going over charts, and having some fun while doing it. Take care. Have a great Thursday, great Friday, and maybe I'll see you for Ticker Request Live on Sunday. Take care, you guys. Bye.